big moves happening right here in the real estate market in the Treasure Valley for the month of November 2022. Let's see how this is going to go ahead and affect your decision to buy, sell, or invest in real estate right here in the Treasure Valley right after this. Welcome back to another episode, everyone, of Mikey's Monthly Market Updates for November of 2022. Of course, my name is Mike Petrus. I am your Star Realtor of Star and the Treasure Valley. And for all of you that are new to this video, of course, this is going to be a breakdown of what happened in the Treasure Valley in the real estate market for the month of November 2022. We're going to go ahead and break down here and analyze the data and be able to determine for you and be able to get my thoughts, especially at the end of this video. So please stick around for this entire video so that you can know the best strategies to deal in buying, selling, or investing right here in the Treasure Valley, or the better known as the greater Boise, Idaho area. But of course, I'd love to hear your thoughts. What do you think is going to be happening in the real estate market coming up? Please comment below. I'm more than responsive to your comments, and I'm more than happy to answer any questions that you have via there. But let's go ahead, let's dive into the information. Let's see what happened, and let's go ahead and figure this out. So let's go ahead and start off with Ada County like we normally do. And if we go ahead and take a look at this graph right in front of us, we see that the median home price here in Ada County took a big shot for the month of 2022. But why? Let's go ahead and let's address that here in just a few minutes. As we can see, the median home price for Ada County dropped to $525,000, which actually now is dipped below what we had as a median home price back beginning of this year. Overall, in total single-family homes, we are down 12.82% since the market correction at 602,250, and we are now down 2.77% since the first of the year at the $540,000 median home price. Looking at this chart of the 6-month breakdown, we notice that back in September, we actually hit the level that we had back in January at $540,000. But we did have that jump last month, which was really kind of interesting at $561,500. But of course, we can see that the median home value has gone back down to $525,000, which is a loss of 6.50% since last month. So why such a dramatic change in the median overall home price here in Ada County for the month of November of 2022? Well, we do know that mortgage interest rates have been on the higher end, which has definitely decreased purchasing power for available buyers out there. So buyers are either A, putting a pause on their potential home search because of such, or it's just decreasing their purchase power overall to be able to go out there and buy. And we can see that in this graph if we take a look at the overall buyer's demand. If we look at the buyer's demand, we notice that only 548 homes sold for the month of November of 2022. That is a level that hasn't been seen since January of 2019. So we know that the buyers are definitely jumping out of the market here and waiting to see what happens with mortgage interest rates because they are high, and so are high home values. But the proof is also in the pudding if we're taking a look at the pendings, which is this orange line over here. We can see that the pendings have actually gone down too. And really the definition of median home price in this example is going to be the number that's right in the middle of half of the homes that sold at the higher end and half of the homes that sold on the lower end. And my guess as to why median home prices also came down is because there really wasn't that many transactions that actually sold, and there aren't too many that are under contract. So that might have restricted how many at the top was actually available to make that median home price say a little bit on the larger side. But we can see, we do know that housing is always a supply and demand issue when it comes to overall home price. And we can see here that this month, the overall inventory is actually dipped down to 1,843 available homes as compared to what we saw back in July, April, etc., when the inventory was way up. And when that gap starts to narrow between the buyer's demand and the inventory, we can kind of expect home prices to more or less stabilize as we go across. However, wonderful things have been happening with mortgage interest rates, especially over this last month, and especially as these core CPI reports, PCE reports, and stuff are showing that inflation might have actually capped. So stay tuned to the end of this video, and let's see how mortgage interest rates might affect what's going on with your purchase decisions, selling decisions, or investing decisions. So let's briefly take a look at the inventory for existing homes here in Ada County. And as we can see by this graph, we can see that a total of 380 homes actually sold in Ada County for the month of November of 2022, with active inventory sitting at 967. If we're taking a look at the overall solds, we can see again that it's hit levels that we have not seen since January of 2019, but that gap again is narrowing between the supply and buyer's demand. And why is this gap beginning to narrow? Really just because of the seasonal shift that we normally get between Q4 and Q1 of every single year in real estate. Looking at overall inventory for new construction, we could see that 168 homes actually sold for the month of November of 2022, which is actually now dipped below levels that we haven't seen since January of 2019. So the buyer's demand overall in new construction is really tapered off here in Ada County. But we can see that the active inventory too is sitting at 876, which puts us at a whopping 5.21 months of total inventory for new construction. And if we're taking the standard definition of what is considered a buyer's market at 6 months worth of inventory, it's right around the corner. But if you watch this channel religiously and you watch these videos, the Mikey's monthly market updates, you will notice that honestly, I think that we have been in a buyer's market for some time now, because you can see that the builders are handing up concessions and so are existing sale homes. Sellers are handing out concessions in order to be competitive to be able to sell their homes. So buyers, take advantage of that while you can. So let's play the game again of who was the biggest loser in overall median home value for November of 2022. Was it existing homes or was it new construction? And taking a look at this graph, let's go ahead and start off with existing homes, And we can see since the market correction sitting at 586,750 down to 497, which is this month of November, we can see that we're down 15.29%. If we're taking a look since the first of the year, which was sitting at 515,100 compared to the 497, we've been down 3.51% since the first of the year. And last month, not that big of an overall correction. We were only down 0.6% since last month in existing homes. Taking a look at new construction, though, here in Ada County, we do know, and if you do follow my channel and these market updates that I do have, there was really kind of a big jump overall in the median home price in new construction in Ada County, especially like between June and July when we hit the maximum value of $690,000. But since that market correction from the peak at 690 to today sitting at 623,237, Ada County has actually gone down 9.67% in new construction homes and a whole whopping 5.21% since last month. But if we are taking a look since the first of the year, the overall median home price in new construction has actually gone up 5.50% since the first of the year when it was sitting at 588,945. So what is really taking the big hit out of the two? Was it existing homes or new construction? And honestly, in Ada County, new construction took the biggest hit out of the two, and hence maybe another reason why the median home price in the total single family homes came down in Ada County. So taking a look at the overall average days on market, we can see that here in Ada County, it's sitting at 47 days, which is again just shy of levels that we haven't seen since January of 2019. So again, it's just kind of showing that the buyer's demand has tapered off here, especially in Ada County. And can we anticipate this number to rise, especially during Q4, Q1, when usually the seasonal happens and a lot of people don't want to list or actively buy during the holiday seasons? Yes, we can see that going, but I still see that the seasonal swing will probably start hitting again and the days on market will lower come Q2, Q3 as we move into next year. Plus, also if mortgage interest rates continue to head in the downward aspect and buyers return to this market, you can anticipate this number to go down too as well. So looking at cancels and expireds, we can actually see that the cancels actually went down for this month too as well compared to last month. And really, why is the deal for that? It's more or less because there's just probably not as many active listings out there and a lot of people that are just kind of jumping out. Or maybe again, there's cancels because some buyers are being able to falling through because their mortgage interest rates weren't really kind of working out for their purchasing power, etc. So there is a couple of avenues as to why the cancels still remain up there, but they have tapered down, and more or less just because the amount of listings have tapered down. But if we're also taking a look at the expireds overall, we see that those are going up. And usually the reasons why the expireds are going up is because people are really still holding out. Sellers are really still holding out for that particular price, thinking that maybe it's like a year and a half ago when this market was still incredibly hot. But again, sellers, I just want to remind you, it is key to appropriately price your home, especially right now, considering that this is a buyer's market and the buyers have more power than you do per se to be able to purchase a house because you have a lot more competition. Pay attention to the end of this video. More than happy to go through my seller strategies with you. And of course, if you'd like to set up an appointment with me to be able to talk about the possible sale of your house, let's talk about my strategies and how I can get you the most money and sell your house in the quickest amount of time possible, even in this market today. All right, and quickly recapping here for Ada County, of course, we do know that it's $525,000 median home price, which is actually the first time since 2014 that the median home price here in Ada County has been down year over year, sitting at 2.5%. The total homes sold here in Ada County was sitting at 548 with an active inventory of 843 homes and the days on market sitting at 47 days. All right, Canyon County, it is your turn. And much like Ada County, the median home price also came down and has now came down below levels that we haven't seen since the first of the year, sitting at $415,000 overall in the median home price. Since the market correction hit between late May, early June, and the max value at the median home price in Canyon County sitting at $476,500 has dipped down 12.90% since that market correction to date. And since the first of the year, when the value was at $424,900 to today's $415,000, it has actually came down another 2.32% since the first of the year. Taking a look at the 6-month breakdown, and much like Canyon County, back in October 2022, we saw the median home price rise to where we've actually seen the median home price take a shot here in November of 2022. We were sitting at $434,814 in October, and now we're sitting again at $415,000, which is down 4.55% since last month. So why the big hit again, really in the overall median home price here in Canyon County? Really, it's because the buyers have jumped out of this market. And why? Because interest rates have been high, which reduced the overall purchasing power that buyers had. And some buyers are just kind of putting this on pause until things actually kind of work themselves out. And if we're looking again at the definition of median home price, it is the number that's right in the middle of the half of the numbers that are on the top, and then half of the numbers sold values that are on the bottom. So that's where they're going to go ahead and get the median home price from. And if we're taking a look at what is actually sold, sitting at 313, there's not a lot of homes that have sold that could be possibly on the higher range to be able to tick up, say, that median home price. And if we're looking at what's under contract too, in the pendings in this orange line, we can see that those are down too. So we can expect the volume of what is going to sell overall to kind of come down as we tick along, or maybe if not stabilize, if mortgage interest rates continue to come back down. So pay attention towards the end of this video when I start talking about mortgage interest rates and where I think they're going to land here coming up very soon. Taking a look at existing home inventory for November of 2022 here in Canyon County, we can see that the total homes sold for the month was sitting at 184, which is now below what the levels were back in January of 2019. So we definitely can see that the buyers have hopped out of this market. And why? Because again, high interest rates, reducing purchasing power, etc. And the total active inventory sitting at 593. But we can see that that gap is starting to kind of narrow itself because of the seasonal shift. Not a lot of people want to list their homes. And also the season's going to have to deal with a little bit with the buyers of them hopping out because they don't want to deal with maybe buying or selling a home during the holiday season. But our overall inventory here in Canyon County for existing homes is sitting at 3.22 months worth of inventory. Looking at the new construction inventory, we can see that a total of 129 homes actually sold for the month of November of 2022, with active inventory sitting at 549. Again, the active inventory is ticking down a little bit, and so is the buyer's demand. But the buyer's demand in new construction is still ticking above what it was in January of 2019, with our total months worth of inventory in new construction sitting at 4.25 months overall. So who was the biggest loser here in Canyon County when it comes to median home price? Was it existing homes or was it new construction for the month of November of 2022? And if we're taking a look at existing homes, if we're taking a look at to when the values kind of peaked themselves in late May, early June, sitting at $425,000 to when the market correction really kind of started, we see we've gone all the way down to $360,000 in the median home value for this month, which is a reduction of 15.29%. If we're looking at the first of the year, when it was sitting at $390,000 compared to today's $360,000, that is down 7.69% since the first of the year. And then last month, we know we ticked up a little bit in October, sitting at $395,000 to today's $360,000, a whopping down whole 8.86% since last month. In new construction, since we hit the peak of $549,000 back in late May, early June here in Canyon County, we have dropped all the way down to $480,990, which is a reduction of 12.38% since really the market correction started taking hold. If we're looking at the first of the year, when the value was at $465,000 to today's $480,990, we're actually up 3.32% since the first of the year. But since last month, sitting at $489,710 to today's value, we really only went down 1.78%. So really, who is the biggest loser out of the two? It's going to be existing homes when it comes to Canyon County as compared to new construction. The average days on market here in Canyon County has hit a whole whopping 59 days, which is now the largest that we have seen and superseded since 2019, or since I even started recording this. So what it is definitely telling us is that the buyer's demand here in Canyon County has definitely cooled. And considering that we're at the more or less the tail end of quarter four here, leading into quarter one, can we expect this number to possibly go up since the seasonal shift is on? Yes, I anticipate that to happen, but really what this is showing is the buyer's demand has definitely cooled here in Canyon County. And then looking at cancels and expireds, again, same trend as we had in Ada County. The cancels have actually gone down, but most likely just because the active inventory has actually kind of came down with it. But again, buyers might not be able to kind of qualify considering the high interest rates and possibly fell out of that particular contract, which led to a cancellation. But again, if we're taking a look at the expireds, sellers, same trend. The expireds are on the way up. So what it is saying is that there's still a lot of sellers out there holding out for the price that they want. And considering what is happening in this market correction, this is definitely not a year and a half ago where basically you could get whatever you wanted out of your house. Of course, I'm being facetious. You couldn't, but you couldn't just ask for whatever kind of price. You do have to really appropriately price your home in today's market and maybe even offer concessions to be able to sell your home over the competition that is out there. And lastly, just to recap for Canyon County, of course, we are sitting at $415,000 median sales price with only 313 homes that actually sold, with an active inventory sitting at 1142, and the total days on market shot way up here in Canyon County, sitting at 59 days. So briefly, let's go ahead and talk about my predictions on where mortgage interest rates are headed and what we can probably expect all the way up until now, maybe in a quarter two, or maybe even a little past quarter two, this coming up next year in 2023. Well, the cool thing is that inflation looks like it's finally been capped. 2 months now of positive CPI reports, or CPI reports showing that the Fed's monetary policies that they're putting on the federal funds rate is actually starting to work as inflation is lowering again month to month over. Core CPI and core PCE is actually also looking good, the PCE. The jobs report and the wage growth is still kind of out for debate. Some people say that there's some funny things going on to actually what's really happening, which I've mentioned into prior videos, but that's kind of neither here nor there, but it does affect what the Fed is going to go ahead and do with their monetary policy this next upcoming meeting, which is tomorrow on the 13th. I'll also be reporting to that, so please subscribe and hit the notification bell so that you're in tune with that video. But 80% of the economists right now are assuming and guessing that the Fed is only going to go up 50 basis points tomorrow as compared to the 75 basis points that they have done over the last several meetings, which is good, which is saying that the Fed is now starting to unwind some of the tightening and some of the really kind of screwed down that they're doing to the federal funds reserve in order to combat inflation. So that is good all the way over around. With the CPI report that came out today, it was good. It dropped rates again. In fact, actually mortgage interest rates have dropped over the last 4 weeks since the last CPI report, PCE, that came out, dropped all the way from a high of 7.37 down to 6.28 where it stands today. Now you might be saying, hey, 6.28 is still kind of high. Well, tomorrow, if they only go up 50 basis points, anticipate that mortgage interest rate to go down too as investors return into MBS. And we know that when the value of the MBS goes up, we know mortgage interest rates go down. And when the price of the 10-year treasury yield goes up, the yields will come back down. And these are all factors that factor into where the mortgage interest rates lie. Now, the other positive thing that we have going on is conservative control, at least of the House of Representatives for now. Whether or not the Senate actually goes our way from the runoff that's happening in Georgia, we'll go ahead and see. But what that's also going to do is bring conservative fiscal responsibility to all this massive spending, because we can't just keep having the Fed print money, throw it out there, print money, throw it out there, print there, throw it out there. It's just not going to be able to help inflation. So we'd hope that our elected representatives get in there and be able to stop the lucrative spending that is happening right now in our government. So hopefully we see that come to fruition. But we also do know that inflation has definitely taken its toll on American families over these months since it's been so high. We basically know that inflation really is kind of like a hidden tax, and it's really stripped away a lot of the savings and stuff that people generally had. But there are going to be still qualified buyers out there, etc., to get into these homes as things start to change. Mortgage interest rates come down. So talk to your mortgage professional today, set the foundation, so that way you'll be in good position to when this stuff starts getting into your wheelhouse. But my predictions, honestly, buyers, is get out there as soon as you can before the leverage of power shifts back over to sellers. And while you still have it right now, we'll go ahead and discuss that in my final thoughts. All right, buyers, let's go ahead and let's start off with you and let's talk about strategies and what I think is going to be popping up here and how and when is going to be the most effective times for you to jump in this market to be able to buy right here in the Treasure Valley. And basically the answer to that question right now is I think that you should start looking heavily. And why do I say this? I say this because not only of what I said with the whole mortgage interest predictions and how we know that inflation is starting to actually tip the other direction towards the 2% goal that the Fed really wants, which is going to lower mortgage interest rates, or say if they even over tighten and create a recession in itself, we know that mortgage interest rates historically come back down. But the key is here is that mortgage interest rates are coming down now as the monetary policies of the Feds are actually starting to take hold. So now, do I see mortgage interest rates ever dumping back into the threes again? Even a point there when they got in like the high twos, low threes, all the way to that. No, I really kind of don't. I anticipate that in interest rates, the new normal will be to between 4 and 5%. And come tomorrow, I actually have the feeling that mortgage interest rates will actually crack below the 6s and head back into the 5s, which is going to start narrowing down that time window. And the more that the core PCE and the core CPI reports, job reports, etc., all these reports come out and make the Fed a lot more comfortable about where things are going, they're going to loosen their monetary policies, which is going to bring more confidence into these markets. And we could either have that soft landing where it comes down, or again, they over tighten and we hit the recession and they come back down. But what I want to point out here is I want to point out the market action indexes that are on Altos Research. If we look at Boise, for example, we could see since basically about August to July, we can see the market action index, which is basically taking what's being sold, the buyers that are out there and what's being sold and coming up with this algorithm that they have. You can see it's starting to flatline, meaning that buyers are in there. Okay, and sellers are in there, and there's kind of a stabilization going on here. And if you also look at Star and you look at Nampa, which I'm showing in these slides, you can see the same trend. So do I see stabilization coming right around the corner anywhere from here up until Q2? Yes, I do in our markets. And especially as mortgage interest rates come down, I see buyers returning to the game. And when they return to the game, they're going to suck up this inventory and it's going to get interesting again. So buyers, this is a great opportunity and great window to get in here and start finding the home of your dreams while there's still inventory, while you can still really negotiate with the sellers. And on top of that, while you can choose the home of your dreams, while there's a lot out there. And there's also sellers that are coughing up concessions right now. So it's a win-win-win for you across the board. And just remember, the key thing here, buyers, is that you marry the home, but you only date the rate. Okay, so even if you're coming in, you get a little bit higher interest rate than you're used to right now, I don't anticipate that you'll be feeling the pain too much to where you can go ahead and refinance for a lower rate coming up soon. We hope. So in essence, buyers, do I see a stabilization coming to the Treasure Valley? Yes, I do, as mortgage interest rates come down and some buyers start returning. Do I see the stabilization coming between now and Q2? Absolutely, yes, I do. We just got to keep monitoring and see what's going on with mortgage interest rates and see how they continue to come down. But the flip side of that coin is if enough buyers come in, we do know that construction out here is basically kind of came to a bit of a halt. So is new construction going to be able to make up, for the influx of possible buyer demand to our area once all the existing inventory gets soaked up? Yeah, that could very well happen too. And the shift of power could go from back to the buyers to the sellers to where the sellers have full advantage again. So buyers, keep that in mind. But stabilization will come first. We'll just keep monitoring the data, see how that goes. And then if the buyers really return because the mortgage interest rates have got down to an acceptable level, which I feel is coming up, then it very well could shift that power. So again, get in there while the buyer's market is still open. All right, sellers, it's your turn. Let's go ahead and just kind of break it down. Yeah, are mortgage interest rates coming back down? Sure. Is there some positive things going on in inflation right now? Absolutely. 2 months of positive core CPE that the monetary policy that the Fed is putting out there is actually combating inflation, plus the PCE, etc. So as mortgage interest rates come down, expect the buyer pool to come back. So that is a good thing for you, but it's not there right now. In fact, there's a lot of buyers, and due to the seasonal shift too as well, that are putting their plans to move on pause, or maybe they're just kind of out because of where the interest rates are currently at. But we'll just have to keep monitoring and see what's going on. But a full point drop or a full percent drop in 4 weeks, that's really good. And we can anticipate that to keep coming. So even if there is a soft landing that the Fed's able to do, cool. If there's a recession, cool, because we know that mortgage interest rates are going to come down and there will be buyers to come out there and be able to soak it up. But in the meantime, it is critical, especially in today's market and especially in the seasonal swing, to appropriately price your home. And even in the holidays, if you're thinking about it, this is a good time because this is when you get the most motivated buyers out there because they're out there during the holiday season. So don't say that the holidays, if you're willing to do it and not interrupt or have a little bit of interruption to your holidays, might be a good idea to go out there and list your home now. But would love to speak with you, set up that appointment, let you know a little bit further, and let you know how all my marketing strategies and everything that I do to be able to sell your house for the most money possible and sell it in the quickest amount of time. So I look forward to hearing from you, and let's go ahead and sell your home. Investors, do I think that now is a good time to jump into this market and be able to get the secondary homes that you are looking for? Sure, absolutely I do, because home values have definitely come down across the Treasure Valley. Price decreases, though, if you look at Altos research, you can see that those are starting to tick down the opposite direction. Could be because of the holiday seasonal shift. But when they start kind of going down, that means that the market might be starting to stabilize. And we can see by the market action index, if you take a look at the buyers section here, that they're starting to stabilize too. So do I think that home prices are going to go down a terrible amount more now that mortgage interest rates are on the way down and the Fed seems to have a handle, or they seem to have a handle on what's going on with inflation month over month? Honestly, I see stabilization around the corner. So even though mortgage interest rates are high, of course, if you're coming out here with cash, that is absolute king, and you're willing to pay off the entire value of the home. If you have that kind of cash reserve, then you're going to get the best capitalization rate. But again, investors, if you are looking for that secondary property, the more money that you do put down, the better for your capitalization rate. And just understand, you are buying the home, but you're dating the rate. So you might feel a little bit of the pain now, or at least your renters are probably going to feel that. to kind of make up, whatever differences is going on, but you'll be able to refinance and better your capitalization rate as the rates continue to go down. And then, of course, if you're in the flip game too as well, I know right now it is tough to borrow money if you do have to borrow money because the federal funds rate is as high as it is, and they are going to put the screws on by another 50 basis points, we hope, tomorrow, and not a 75 basis point. But there is more inventory to go out there and actually get the home that you are looking for in order to flip. So head out there. If you're looking to buy a secondary property or you're looking for flip properties, please feel free to reach out to me. Be more than happy to represent you in that transaction. So investors, I look forward to hearing from you. All right, renters, and of course, last but not least, it's going to be you. And of course, as I say every single time, you are paying 100% interest rate because you're not the one getting the equity. Now, has equity been good for secondary property owners right now? No, because of the market correction and the values have been coming down. But according to the Market Action Index, if you want to go back into the buyer section, we do notice that it is starting to kind of stabilize itself. So do we see prices eventually stabilizing here? I think between now and Q2, absolutely, and especially as mortgage interest rates go down, it might actually put you into the game again if the mortgage interest rates were hurting you from what you really wanted to get. So keep your eye on that and subscribe to this channel, hit the notification bell because I do come up with mortgage updates to keep you in the loop. But now is a great time to go ahead and talk to your loan officer and start setting the foundation to be able to get that home purchase. And if you're looking for really great loan officers around here in the Treasure Valley, please feel free to reach out to me. More than happy to refer you to one. But renters, now would be a great time to get in there before you get put back into that situation where you could possibly be fighting for homes again. So renters, keep that in mind. Look forward to hearing from you. Please feel free to reach out to me. More than happy to represent you. Talk to you then. As always, thank you very much, everybody, for taking the time out of your day to watch this video. I know my market updates are kind of on the lengthy side, so I did go ahead and put in chapters. So if you'd like to reverse back to any of the chapter sections, please feel free to do so. But of course, if you have any further questions or you're looking to buy, sell, or invest in real estate right here in the Treasure Valley, please feel free to reach out to me. I can be reached at 208-715-STAR. Again, that's 208-715-7827. And if you're looking to begin your home shopping experience today, please feel free to visit my website at www.yourstarrealtor.com. Also, if you're looking to relocate in from out of state right here to the Treasure Valley, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. Also, please feel free to comment with any questions that you do have. I'm very responsive to them, more than happy to answer any questions, further questions, or answer them via phone. But also click that subscribe button below. Hit the notification bell so that you're constantly in tune with all the videos that I do come up with, and I look forward to the day that we speak. Well, thanks again very much, everybody. God bless. I look forward to the day I call you my neighbor. Until then, thank you so much. Bye-bye.